Hello friends, welcome to the BFM series for June 2026. In the BFM series, as you know, we are covering all the numericals, objective questions, case studies, everything we are covering. All the subjects. See, BFM is, I am taking BFM. Other mentors are taking other subjects as well. ABM also I am taking. ABFM, BRBL, right? So watch it completely, like the video, subscribe to the channel, click on the bell icon. All important questions you will be getting over here, right? Very important questions are taken, repeated ones. Case studies, important case studies are covered. And you know the importance of case studies in BFM paper, right? Almost 40 marks. So watch it completely. Today we'll be covering correspondent banking and NRI accounts. We'll be covering a case study on correspondent banking. Very important one. And after that I'll be covering some other questions as well, which are of generally which students face the problem relating to bonds or many other topics as well. So watch it completely. Okay. Like the video, subscribe to the channel, click on the bell icon. Let's start. Is XYZ Tech from India, that is Bharat, customer of SBH Bank. So XYZ Tech is a customer of SBH Bank. Okay, agrees to purchase a machinery from Global Machinery Incorporation, USA. So this Global Machinery company is in USA. XYZ Tech is in India, Bharat. XYZ Tech is purchasing the machinery. Okay, so XYZ Tech is purchasing the machinery. Got it? It means who's the importer? Type it in the comment section. Who's the importer? Right? Comments. Let me see the comments. Who's the importer and who's the exporter? Importer is XYZ Tech. Exporter is Global GM, we'll call it. Okay? GM. Customer of Citibank. So GM is a customer of Citibank. Okay? XYZ is a customer of SBH Bank. Simple, clear transaction. For total of $5 lakhs. Okay. So total amount is 5 lakhs. To mitigate the payment risk. Now payment risk means, see, XYZ Tech is from Bharat. He doesn't understand whether this global will pay it correctly or not. To mitigate the risk, the parties agreed to use an irrevocable international letter of credit. So they agree for the LC. Okay. So basically the LC transaction is always safe. See, why LC is always safe? LC is safe because, number one, it is bank to bank. The buyer is actually not involved in that, right? Because see, this exporter is global. Global will always be afraid of payment, whether this XYZ will pay or not, isn't it? So that's why they agree for an LC. SBH does not have a direct operational relationship or account with Citibank. So SBH does not have any relationship with Citibank. Okay. So this bank is not having any relationship with Citibank. Got it? So SBH Bank sends a SWIFT to HBSC Bank, where it has relationships for further transmission to Citibank. So SBH does all the movement or all the connections, everything whatever it wants to do. It does not have direct relationship with Citibank. See, understand the concept over here. This is, now we'll leave aside this XYZ and Global Tech for time being. Here it is SBH, here it is Citibank, Citi. Okay. Now they don't have direct relationship. Direct relationship not there. So what do? They take, SBH Bank takes help of HBSC. Okay, it takes help of HBSC, and then this HBSC Bank will help this SBH Bank to do all the transactions, because HBSC Bank is holding the account of both SBH also and Citibank also. Both these banks are having account with SBH or relationship with SBH, HC. Okay, so SBH Bank sends a SWIFT to HBSC Bank, where it has relations for further transmission to Citibank. So it will send all the messages to HBSC and further it will transmit to city. Okay, simple case, no relation, so using a third party. Now this third party is called as what? This arrangement is called as what? Type it in the comment section. What is this arrangement called as? Where we make use of the third party or third bank. It is called as LORO arrangement. Okay, this is known as LORO arrangement. Okay, got it? How many of you got this correct? Type in the comment section. LORO. It's called as LORO arrangement. Okay. So now answer the following questions. Now based on this case, you have to answer the questions. Okay. Let me see how many of you can answer it. Very simple questions. First one. Dash requests dash to issue an LC in favor of dash. My God. Dash requests dash to issue an LC in favor of dash. Who will request the LC? Who will request to issue? Somebody will be requesting, right? Somebody will request someone to give an LC. Otherwise, why will any bank give? Isn't it? So who will request? XYZ Tech will request the SBH Bank to issue an LC in favor of Global Machinery Incorporation. Now this you have to decide. Second, SBH Bank will request XYZ Tech to issue an LC in favor of Citibank. Check this. Third one, XYZ Tech will request Citibank to issue an LC in favor of SBH Bank. Last one, SBH Bank will request Global Machinery to issue an LC in favor of XYZ Tech. What is the correct answer? Think, everyone think. Everyone think. Let me see in the comment section. Which is the right answer as per you? Let me see in the comment section. Which is the right answer? Very confusing. Not confusing actually, it's very easy. What do you think? Okay. Who requests for issuing the LC? Always. Who requests for issuing the LC? Is it requested by the bank or is it requested by the importer or is it requested by the exporter? Who will request? LC is always requested by importer. LC is always requested by importer. So who is the importer over here? Who is the importer? Importer, right? Importer is who? XYZ. XYZ. Okay? So XYZ will request. Whom? Whom will it request? Now let's look at the relation. See this. SBH is, whose customer is SBH? XYZ Limited is a customer of SBH. And Citibank has a customer who, what? GM, right? We'll write it GM now. GM. So SBH, XYZ will request to whom? Which is his bank? His bank is SBH. So XYZ will request SBH, right, to issue an LC. So LC will be issued by SBH, requested by XYZ. In favor of whom? See this. In favor of whom? In favor of. So XYZ is correct over here. SBH is correct over here. In favor of whom? Is this correct? Is the LC issued in favor of Global Machinery or is it issued in favor of Citibank? So kindly note, LC is always issued in the favor of beneficiary, seller, exporter. Who is the exporter over here? Global Machinery, right? So LC is always issued in favor of exporter, not in the favor of his bank. Okay? So here the answer is A. XYZ Tech will request SBH Bank to issue an LC in favor of Global Machinery Incorporation. Clear? Question number 1. Question number 2. Who Who is the issuing bank in this case? Now, this is simple, isn't it? Who is the issuing bank in this case? SBH Bank, HBSC Bank, Citibank, none of the above. Who is the issuing bank? Let me see in the comments. Who is the issuing bank in this case? Yeah? Issuing bank is? It is? Who is issuing the LC? See, request SBH Bank to issue the LC. So, who is the issuer? SBH. SBH Bank is the issuing bank in this case. SBH Bank is the issuing bank in this case. Got it, everyone? Clear? Are you getting the concept clear, everyone? Yeah? Next. Who is the correspondent bank in this case? Who is the correspondent bank now? SBH, HBSC, Citibank, or none of the above? Correspondent. Correspondent means middleman. Who is the middle person over here? Middle person is HBSC, isn't it? HBSC, SBH is the issuing bank. Citibank is the bank of this seller. This is the middle person, right? Clear, everyone? Who is the beneficiary in this case? So, who is the Beni? SBH Bank, HBSC Bank, Citibank, none of the above. Let me see. Who can answer it correctly? Who is the beneficiary? Sorry, bank. Who is the beneficiary bank in this case? Beni Bank in this case, not beneficiary. Beneficiary bank in this case. So, who is it? SBH Bank, HBSC Bank, Citibank, and none of the above. Beni Bank we want. Yes? It is Citibank. Okay? Now, I'll ask you two questions more. Okay? More are there. Okay. Related to this only. Who is the beneficiary in this case? Beneficiary. Who is the Beni in this LC? Who is the beneficiary in this LC? Everyone. This question is not there over here. I am asking separately. Who is the beneficiary? Beneficiary means always the exporter. Exporter. Okay, so it will be GM. What that Global Motors, whatever that name is, right? What is the name? Global Machinery. Okay. Beni is this. Who is the applicant in this case? Applicant. Who is the applicant in this case? Applicant means the one who applies for the LC. Who has applied for the LC? XYZ. So XYZ Tech becomes the applicant. XYZ Tech. Okay, that becomes the applicant. More are there. This one. Check this. Global Machinery ships the goods and presents the required documents. That is bill of lading, commercial invoice, insurance to Dash Bank. So, firstly, Global Machinery ships the goods. Why Global Machinery will ship the goods? Because Global Machinery is what? It is the exporter. It is a manufacturer of that machine. So, it will manufacture and send it. Then it will prepare all the documents. So, these documents will be submitted by Global Machinery to whom? Will it be submitting to SBH Bank or HBSC Bank or Citibank or none of the above? Global Machinery will submit the documents to whom? Yes? Will submit the docs to Citibank, because Global Machinery, correct, many of you have answered correct, because Global Machinery has account with Citibank. So Citibank, it will submit the docs to Citibank only. Citibank will further send it to SBH Bank. Okay. So Citibank is the beneficiary bank, SBH Bank is the applicant bank or issuing bank, and HBSC Bank is the correspondent bank, middleman. Okay. Dash verifies the documents for compliance with the LC terms as a final authority. Who verifies this as a final authority? SBH Bank, HBSC Bank, Citibank, and none of the above. Who will verify the documents? net. In the end, final authority. So in the end, who will verify? It will be verified by SBH, issuing bank. See, issuing bank has to receive all the documents. Net. All the documents will be received by the issuing bank. Okay? So case study is over here. Got it? Clear? Next question now. Ajay is an exporter in Gujarat and wishes to use the help of Bank X for assistance in handling documents on collection basis for sending the foreign correspondent bank. Which type of foreign exchange facility will be provided by Bank X? Now this is correspondent banking. So Ajay is an exporter, wishes to use the help of Bank X for handling the documents on collection basis. So it wants only the bank to handle the documents. Ajay will be submitting the documents to that Bank X and Bank X will send it further to the buyer, okay, or his bank, buyer's bank, okay. Foreign correspondent bank, sending to foreign correspondent bank, okay. So which type of facilities? Advising on export LC. So what will Bank X provide? Advising on export LC, letter of credit, handling of export payments, collection of export bills, financing export bills. So what type of services will be provided by this Bank X? Advising on export letter of credit. So is there any letter of credit involved over here? It's mentioned collection. Collection is separate than LC. Okay? Collection is totally separate than LC. So this LC is out. Right? Out of question. LC is not there. Handling of export payments. Has Ajay told that bank that kindly receive the payment also? What is mentioned? Collection basis for sending to the foreign correspondent. Only sending. Ajay has not told the bank that payment will be received by you. That Ajay will make a separate arrangement. Okay? Ajay, this bank has nothing to do with payment. So, out. Collection of export bills. Collection of export bills. Collection means what? Export bills. See, the payment which will be received from that bank. The payment which will be received from that foreign correspondent bank will be received by this Bank X. So has Ajay mentioned over here that you receive the payment? No. Payment might be received from some other bank. It might happen. Out. Financing export bills. This bank can do. Because it is handling the collection bills. It is handling the documents. So this bank can finance. Definitely. So this job can be done. Generally, I'll tell you. These two things are handled by the same bank. Generally, it's not compulsory. Means the payment received, okay, is also handled by the same bank which sends the documents. 90%. It's 10%. There can be variations because international trade is a totally vast subject. There are many ifs and buts over here. Okay. So, in this present case, looking at the only documentation given or the material given, you can say that financing of export bills will be handled by this Bank X. Got it, everyone? Clear? Okay. Next. Which of the following statement about correspondent banks is not true? Which of the following statements about correspondent bank is not true? Correspondent banks provide services as agents for collection of export, import bills as well as checks in their country. So does correspondent bank do this? As a services as an agent. So agency collection relationship is there. So this is true. See, you want not true, you want false. Right? This is required. This is true. Correspondent bank uses only a single currency for transaction. Is it so? Single currency. I deal only in rupees. I will not deal in any other currency. Is it so? You are a bank. You have to deal in multi-currencies whenever you are dealing with forex, means or international trade. So this becomes false. But check others also. Something else might also be false. Correspondent banks act as a middleman between different financial institutions. That is true. Just now we saw that case, right? So, middleman, this is true. And all of the above are true. No, all of the above are not true. Okay? So, this is the required answer. Correspondent bank uses only a single currency for transaction. That is not true. Which among the following statement is correct? You want a correct one now. Okay, focus, correct one. Nostro account. A bank holds a foreign currency in another bank. In nostro. Bank holds the foreign currency in another bank. Vostro. An account that correspondent bank holds on behalf of another bank. You want the correct one, huh? Account that a correspondent bank holds on behalf of another bank. That is vostro. Check. You only check. Loro is the reflection of nostro account in the books of the principal bank. So it's the reflection of the nostro account, okay, in the books of the principal bank. So which one is true over here? Only 1 and 2. 1 and 2. 2 is what? Account that correspondent bank holds on behalf of another bank. Another bank. Okay? I'll give this option over here as only 1 also 1. Let me check this. See, one option is only 1. Okay? Now you think. See, 1 and 2. 2 and 3. Only 1. And all of the above. You want a correct one. Think over it, everyone. Think over it. Yes? What is the answer? Very tricky one. Okay? It's really tricky. The answer is only 1. Only 1 is the answer. Why? Because 2 is also not true. Why 2 is not true? What is vostro? When other bank maintains an account with yourself, direct account, no middleman. See, on behalf of somebody, no, not on behalf of. You directly maintain your own account, simple. Citibank maintaining an account with SBI, vostro. In the books of SBI, it's vostro. In books of Citibank, it's nostro. An investor is considering the purchase price of following bond. Face value is ₹100, coupon rate is 15%, maturity is 1 year. If she wants a yield of 13%, what is the maximum price she should pay? Look at this. Okay? Face value is given as 100, coupon rate is 15%, maturity is 1 year, yield is 13%. Now just to refresh, some of you might not be knowing the background of bonds because you might have done it in JAIIB, now forgotten. Bond always have 5 elements. Kindly note, bond always has 5 elements. Which are the 5 elements? One is face value. Face value, we call it par value also, face value F. Then we have period, we call it N. See, this is F, this is N. Then you have coupon, this is called as C. All these 3 items are fixed, they are static, they don't change. They will never change for a bond. Okay. Two elements are separate. They are market rate, market price. This is called as P, and market rate. This is called as R. You can call it R or I, anything. These are dynamic. These go on changing. They constantly change. Okay. So this is dynamic. So these are the 5 elements in any bond calculations. Now in this, what is asked? What price should she pay? So price means we are asked this part. So this is a question mark. If this is a question mark, then the remaining 4 should be given to you. See, always remember, 4 should be given to you, then only you can find out the 5th. So face value, given 100. Period, given, what is the period? Maturity 1 year. Okay. Coupon, given 15%. Yield, given, yield means market rate, given as 13%. So everything is given. You have to find out the present value of the bond. For finding the present value of the bond, what should we do? See, I have done the calculation over here. Simplified calculations for you. See, price of any bond is equal to lump sum price plus annuity price. Now, what do you mean by this lump sum price? What is this annuity price? See, whenever you invest in any bond, okay, whenever you invest in any bond, I'll show you over here. Whenever you invest in any bond, suppose if I invest today, now what is the period? 1 year, or let's say any bond for 3 years. Example, if I invest today in any bond for 3 years, what will I get? Every year I'll get coupon 1, 2 and 3. This is coupon I'll be getting, means interest, fixed rate of interest. So coupon. And on maturity, I'll get back the face value also. So face value F. So these 3 are called as annuity. This C you get it as annuity. I'll write it over here. These 3 are annuity. Means you get it every year. And this you get it as lump sum. In the end, lump sum. Now what are the formula for them then? Lump sum. Okay. So annuity and lump sum. Coupon you always get it in annuity. Face value you always get it in lump sum. So now these 2 formula you have to find out. And that will give you a present value of the bond. See this. So that's why I have written it over here. Price of any bond is equal to lump sum plus annuity, face value plus coupon. So what is for face value now? Let's calculate it for face value. So that is equal to F upon 1 plus R raised to N. F upon 1 plus R raised to N. What is F given? 100, face value 100. What is R given? 13%. Kindly note, don't take 15%. That is coupon. Coupon you should never take. You should take R, yield, 13%. So it is 1 plus 0.13. 13% means 0.13. So 1 plus 0.13 raised to N. What is N? Maturity is given as 1 year. So 1 year, 1 only. So now what will be the answer? 100 upon 1.13. 100 upon 1.13. So divide this. 100 upon 1.13. Everyone check this. Are you getting the answer of 88 point something? 88.49. Are you getting the answer? 88.49. Check it. Everyone must get this answer. 88.49. Are you getting it? Let me see the comment section. Okay? Yeah. So you have got it. Many of you are getting it. Lump sum is 88.49. Now next, annuity, coupon. Coupon formula is present value formula. C into 1 plus R raised to N minus 1 upon R into 1 plus R raised to N. So it is C into 1 plus R raised to N minus 1 upon R into 1 plus R raised to N. This is the present value of ordinary annuity. So use it. What is C? C is given as, see this, 15%. So kindly remember, percent means what? You can't take it in percent. Coupon should always be taken in rupees. So 15% of 100 rupees. 15% of 100 rupees. So that will be 15 rupees. So see this, 15 rupees into, now this answer, 1 plus r raised to n, that is same. 1.13 raised to n. So this will be same. So take it 1.13 only. 1.13 raised to 1 minus 1 upon r is 0.13 into 1 plus r raised to n. So again 1.13 raised to 1. What is formula, everyone? So 15 into 1.13 minus 1 upon 0.13 into 1.13. So this will become what? 15 into 0.13 divided by, see this will be 0.13, right? 1.13 minus 1. So this will get cancelled. So it becomes 15 upon 1.13. So if you divide this 15 upon 1.13, you will get it as 13.27. You will get it as 13.27. Got it? Everyone check this. Are you getting it? 13.27. Check it everyone. Let me see. Comment section. I must get it in comment section, everyone. 13.27. Are you getting it? Correct. Got it. 1. Chalo, let's move on. So, 2 you have got it. Lump sum also, annuity also. So, find the answer. 88 plus 13.27. Lump sum plus annuity. So, that is equal to 101.76. So, this is my present value of the bond. Present value. So, if this is my present value as per calculations, what should I pay? I'll pay the same amount. 101.76. Not more than that. Okay, if I say I'll pay 100, then the person will not sell it to me. When I do the calculations, even the person seller will do the calculations. The seller will say, my calculation is 101.76. Why will I sell you at 1.76 less? Okay. See, the bonds purchased are not in single. You will say, sir, 1.76, how much difference does it make? Imagine you purchase 1 lakh bonds. So it will lead to 1,76,000 difference. Okay, that is the main point. Bonds are never purchased 1 or 2. They are purchased in lakhs and crores. Okay. So the price which you will be paying is 101.76. Got it, everyone? Next. Which of the following statement about correspondent banks is not true? Correspondent bank, kindly note. Which of them regarding correspondent bank is not true? What are correspondent banks? These are the agent banks of each other. These are the agent banks. Means if I am SBI, I'll appoint Citibank as the agent in USA for my job, some job. Vice versa is also true. Citibank will appoint SBI for some job or any bank as such. It is mainly used in trade finance. Okay. So correspondent banks provide service as agents for collection of export-import bills as well as checks in their country. So correspondent banks provide, what do they provide? They provide services as agents for collection of export-import bills as well as checks in their country. So do they do so? Yes. Correspondent bank uses only a single currency for transaction. Does it use only a single currency? No, that is not true, because it will deal in multiple currencies. Whichever country it is, it has to deal in those currencies. Okay? Correspondent banks act as middlemen between different financial institutions. So they act as middlemen. Do they act as middlemen? Yes. They will act as an agent. So what do you want? You want not true. So not true is what? This single currency. That is false. They use multiple currencies. Okay? Which of the following off-balance sheet exposure items come under the low-risk categories of balance sheet? Which of them come under the low-risk categories? Swaps, letter of credit, money guarantees and indemnities. Low risk. Which one is low risk category? Very less risk. Now I'll tell you, many of you will get confused over here. Many of you will answer this as, let's say, something like indemnities they will answer. Or LCs, you can answer LC. But the real answer is totally different. Real answer is swaps. Swap is the lowest risk product. Lowest risk. Because in swap, what do we do? Whenever we do any financial swap, swap means basically two legs are there. Two legs. Okay, one is fixed, and other one is floating, fixed and floating. One is fixed, other one is floating. Okay, we get the currency in one leg, and we pay the currency in another leg. Or vice versa is also true. We will pay over here in fixed and get in floating. So vice versa is also true. Anything is true. Got it? So fixed and floating, very thin margins are there, and also the risk is very less. Generally, swaps are fully covered. These are OTC. Here we have series of payments. See, kindly note, swaps are always series of payment. Okay? So this is the answer. Swaps are the lowest risk. Use forward rate agreements, swaps, options, financial futures to construct dash securities and does hedge against any exposure to interest rate risk. So we use forward rate agreements, swaps, this financial futures to construct dash securities. Which type of securities? Synthetic, normal, collateral, all ABC. What is the answer? Yes. Firstly, understand this is called as synthetic securities. It is also called as, one more word is there, structured products. Structured. This is also called as structured securities, structured products. Synthetic securities, it means we combine two different derivatives and then create the third derivative or third product. So I can combine FRA, forward rate agreement, FRA plus swap. I can combine this. Depending on customer to customer. See, this is the OTC product. I'll do it whenever I do a synthetic product. It is always done for a specific customer. So it's a OTC product. The requirement of the customer and mine. We will combine it and do it accordingly. Okay? So synthetic. When a buyer has to pay the interest in rupees and principal in USD, the borrower may hedge only the interest rate. It is known as. Now, these are three separate swaps. Three separate swaps. That is known as interest only swap, interest only, principal only, principal only, okay, principal only, and last one is I plus P, interest plus principal swap. These are the three swaps, and mind it, out of these three, two will be asked to in exam, surely. In interest only, I'll pay interest in rupees, interest in rupees. In principal only, I'll pay principal in rupees. In I plus P, I'll pay I plus P both in rupees. Remember this basic. So, when the buyer has to pay the interest in rupees, so interest is paid in rupees, so it will be called as what? Simple name now. Principal only swap, currency only swap, coupon only swap, and interest only swap. So interest only swap will be the answer over here. Why? Because interest is paid in rupees. Kindly remember this basic. Whenever you pay interest in rupees, it's called as interest only. Whenever you pay principal in rupees, it's called as principal only swap. And whenever you pay both in rupees, it's called as I plus P swap. Okay? Got it? Which of the following is a potential cost of adverse movement of interest rates that a bank faces on its deposits, borrowings, lendings, or interest rate derivatives? So potential cost of adverse movement of interest rates. Adverse. If the interest rate goes against you, okay, then what? So that a bank faces on its deposits, borrowings, lendings, legal risk, operational risk, interest rate risk, and country risk. Kindly note, what do you mean by the adverse movement? See, if you have purchased a bond you have purchased, okay, buy. So you have purchased at what rate? Let's say buy. Buy I have done at, let's say, 100 rupees bond, I have purchased at 110 rupees. And at that time, the repo rate was, interest rate, repo rate was, let's say, let's say 5%. I'm giving you an example, 5%. Repo was 5% at that time. Now what happens? After 2 months, 3 months, this bond I have purchased at 110. Now the repo rate goes to, let's say, 6%. What will happen? If repo rate goes to 6%, what will happen to the price? Price will move down. Always remember, interest rate and price are in opposite direction. So price will move down. So this will go to, let's say, 101. So I am in a loss now. Here I am in a loss because I purchased at 110 and it's giving me 101. So I am in a loss. So this is basically the interest rate risk or price risk. Interest rate risk and price risk are always related. See, this is the interest rate risk, interest rate going up, and this is the price risk, price going down. So they are related to each other. Okay? Got it, everyone? Okay? So now, before going everywhere, the new batch of CAIIB is just starting now. Okay, it's in the starting phase. Join this ASAP. Don't miss this. 6th March, it will be starting. Fresh batch. All the numericals, objective questions, case studies covered. Okay, complete details, full portion is covered. Don't miss. Live classes, recorded videos, combination, everything you will be getting. It's a huge point for you. And how many days are remaining? Very few, right? Hardly March, April, May. Three months, right? Join this ASAP. Use the code Y432. See, Y432. Y432. Click on apply. Look at this. 81% discount plus 1% extra, 82% by downloading the app. Join this ASAP. One more option I'll show you. One of the best options. Go for Mahapack. Increment Mahapack. See this. CAIIB Increment Mahapack. Check this. 4x validity is going on right now. 4x. Means you buy for 4 months, you get it for 16 months. You buy for 7 months, you get it for 28 months. Plus 82% discount is there. 15 plus batches per subject. You get. Plus, you get physical question bank, physical formula bank delivered at your home. Ebooks, mock tests, they are already there. Mock tests are same as that of your exam, same. Use it, join ASAP, but never forget the code Y432. Don't forget this. Okay? Bye.